All right. Hey, everyone. Mark here, Mark B Markets. Thank you for joining me for another Bitcoin video analysis session. I am not streaming on Rumble today. I was hoping to get that up and running, but it's going to take me another week. I still have to fix a few things, right? So I'm not going to get into technical aspect of it, but I think I should have it running properly next week. Anyway, I appreciate your patience. So if you're new to the stream, welcome. Here's how the stream works. So first, I'm going to run through the economic calendar. It is something you should do at the beginning of every week. It doesn't matter which one you use, but there are certain items we are looking for. So we're going to go over that. Second, we're going to go over the Bitcoin chart. I sent out a brief report to my members earlier today, around 8 a.m., talking about the potential double top, which never developed. Now, I put something very important in that report, which we're going to talk about. Stian, hopefully that thing was on Twitter. Hey, Will, good to see you. Was it on Twitter? Because I tried to share one on Twitter too, just not the same. I changed the text. I sent the report to our members. I wrote one thing, and then on Twitter, I just wrote more of like a basic thing. Anyway, I tried to send one over there. Anyway, so Bitcoin has changed since then, right? So we're going to address that. I also want to talk about this general situation with this B wave. It wasn't on Twitter. Oh man, I tried to send it. I don't understand how that works. Anyway, all right, we'll figure that out. And then we're going to talk about the title of today's show, which is how to invest in Bitcoin at high prices. These are ridiculously high prices. Can you invest here? Well, we're going to talk about that because I'm going to give you basically an investment plan that you can consider, right, as this thing continues to do what it does. And then from there, we can talk about some trade scanner stuff. If Stian wants to share like a trade or something, like a trade idea that came from the trade scanner, we can take a quick look at that. All right, so with all that, let's get started. Let me show you my get started slide over here. All right, so this is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, and I am streaming on TradingView. So let me move that over. Oh, that's the wrong one. Okay, hold on a second. Let me put this back over here, and let me grab the TradingView one. All right, people. So, hey, Puri, good to see you. Thanks for saying hello over there on TradingView. And let me just move this aside so I can read the text. Okay, I can see it now. And so anyway, Stian, good to see you. Will, anyone else who want to say hello? That's cool. Also, if you want to share what city or what country you're from, that's always a fun fact. I'm streaming from the greater New York City area, also known as Northern New Jersey. Today is the day after the Super Bowl. Obviously, the whole world participates in the Super Bowl these days. At one time, it just used to be this country. So there's probably a lot of tired and hungover people, messing around today. So it might be a slow day today in terms of viewers. Anyway, hope you enjoyed that. All right, so let's get started with our first thing. Actually, before I get into that, let me just mention something. If you notice the links in the description, there are two links, one for Bybit and one for MEXC. Those are affiliate links. Those help Stian. Those are his affiliate links. So if you're interested in a new exchange, you want to try something else out because maybe you're not happy with the exchange you're using, consider signing up and you register for an account, you fund an account, and you place trades, and Stian will get a small cut of the commission, but that goes a long way into helping him support the community. He's done a lot of work for this community. I mean, the trade bot, this app that he built for me that allows me to share information much easier. I love this thing. So it goes a long way, and we appreciate your help. Also, when we get the bot, the trade scanner, to take trades on your behalf, it's going to happen most likely on Bybit first. So if you have a Bybit account, you'll be ahead of everyone else. You'll be able to, set that up and have the bot trade for you, which is what we're working toward. We have a ways to go on that. He just told me he updated a few things on the bot, but we still have a little more to go before I can really get into detail on that. All right, but anyway, but that's where it's going to start. So consider that. Okay. By the way, it doesn't work unless you actually fund the account. Just have to let you know that. All right. Anyway. So that's that. Also, check the other links in the description if you're interested in a free trial of the trade scanner, because right now the trade scanner sends emails out when there's a trade idea. If you'd like to try that out, you have 1 week for free. You just sign up, you put your information in, and you're at it for a week. And if you don't cancel, you will be billed, okay, the monthly rate. If you cancel, then you pay nothing, obviously. If you want it cheaper than the current price, you can pay in advance, right? You could pay a larger amount, but it's cheaper on the month-to-month basis. So I just wanted to mention that. You could see all that information at the marketsignalspro.com website. I encourage you to check that out and join my free community, okay? We have a free community. We have a lot of information going through those channels, and we're working more and more to make that a better experience for everyone. All right, so check that out as well. All right, so let's get moving here, shall we? Economic calendar is first thing on the list. So this week, I looked at the calendar, and there were a few items like from, I saw something from the British pound. I believe one of their bankers are speaking today or something like that. None of that stuff really matters. All right, Tuesday, which is tomorrow, the 13th of February, we have the CPI report. Okay, that's an important number, and that comes out once a month. I believe it's a 10 a.m. number. It could be 10:30 a.m. Eastern time. I'm not exactly sure. You want to double check that, especially if you're in another time zone. Double check that. But it comes out around that time. If there are any surprises, it can move the dollar in a dramatic way, which can move the S&P and the NASDAQ and the bonds and everything else. All right, so make sure you're aware of that. The idea is not to trade the CPI report. The idea is to stay out of its way, to make sure you don't get caught in anything as that report comes out. Now, the report may be a non-event. Often it is, but there can be some surprises as well. So just be aware, all right? We have the CPI report tomorrow. Then on Thursday, which is what, the 15th, we have, I believe it was a retail sales comes out on the 15th for the US. I believe that comes around out at the same time, 10 o'clock, 10 a.m. or something like that. Double check, okay? Eastern time or New York time. And then that's it. There were some other items on the calendar, but these items, like I saw something for the euro, I saw something for the Aussie. These are not global market moving numbers. So you don't have to worry about them. Like if there was no CPI report and no retail sales this week, I would say there's nothing on the economic calendar. All right. Because we're only interested in major market moving pieces of information like non-farm payrolls, like FOMC meetings, like Chairman Powell testimonies, and things like the CPI and stuff like that. All right. So anyway, so that's all we have on the calendar this week. Next, let's get into this chart, shall we? And let me make it bigger so you guys can see what's going on. I'm going to use this one today. Now, I wrote my article on TradingView on Saturday. I published it on Saturday. And I talked about, that's where I came up with this. I changed the configuration on my chart because my previous illustration, if you look at the week before, right, I had the bounce off of the 40K level, whatever, which we never got, okay? Originally, I was anticipating, let me show you here. I was anticipating this ideal scenario of a retest of this level in the area here where I was looking for a swing trade long. We never got it. So there was never a reason to trade. Instead, we got the tight pullback, right? And then the rally, and it's been going ever since. That happens. I've explained that was a possibility, but it wasn't one that I was interested in taking the risk on for a swing trade. I wanted the higher probability level, which was here. You have to understand something. This game is not about what you see. This game is about what you do not see. That is what you should be thinking about. I see comments in the chat over in the community, right? And then one guy was like questioning about my bond. I wrote something about the bonds, and the guy was questioning, does that even mean anything? I mean, look, the markets are making new high after new high after new high, right? You are reacting to what you see, which can be a mistake, right? Because you're reacting to the obvious. You have to look at what you cannot see, which is the risk. If the risk was actually, or if there was a way to see it on the chart, no one would trade, okay? Because you'd always see like this large amount of risk and you'd be like, man, this sucks. I'm not going to trade this, right? So you have to look at that and you have to be willing to take the risk in order to participate in these situations. Now, this move was not an easy move to participate. There was a continuation pattern, which I wrote about in my TradingView article. It was this inside bar right here. I talked about it. And I said, if the high is taken out, this thing can go a lot higher, okay? If the low was taken out, then that would change things. But we never even came near the low. Now, let me also bring up the report that I wrote earlier today for for some of my members who have access to that channel. I showed this chart, but at the time, this is not the candle that we had, right? At the time, we had like this little red candle developing over here, something like that. That's what it looked like at the time. In fact, if you could go to the channel and you can see the picture of the chart at the time. And I said it could be a double top developing, but the candle needs to close before you judge the candle. That is a key aspect of this, right? You must wait for the close. This candle is obviously closing nowhere near what it looked like at the beginning of the day or earlier today, right? So the closing price people take for granted. It's the most important price because it's going to define the candle. And then what candle you have can mean something. It can also mean nothing. It can be random, but a lot of times it can mean something like a bearish pin bar. You realize that pin bar at one point was all green, right? It was one solid green candle, like looked like that. And then it closed weak. That's meaningful, right? But people don't appreciate that. They just see whatever and they react to whatever. So earlier today, we had this red candle developing, but look where we are now. Nothing what it looked like earlier. So this changes the picture. Now, here's the thing. I wrote about this. This is the ideal scenario. You could see the line, these lines that I draw on my chart. That's not a forecast. Don't be confused. This is the area. This is what I'm anticipating. It's one out of a range of scenarios. I just write the one, I draw the one that I think is most probable. And a lot of times the market doesn't agree with what I draw, but this time so far it is, right? Now, this location up in here, this blue rectangle that I drew here, that is a high probability reversal zone. There's a very high chance that this thing turns red over the next few days. So why am I telling you all this? For one, don't get carried away with this nonsense and don't feel like you're missing out. I hear that all the time. Oh, I can't take it anymore. I'm missing out. This market just keeps going higher and higher without me and I'm not in, you know, and so what happens is it creates more and more anxiety. And then at some point it's like going nuts and you're like, okay, I can't take it anymore. I'm going to buy it now. And that happens to be the top. That happens a lot. Okay. Don't feel like you're missing out. Markets pull back. They don't move in straight lines. When it looks its best, it's usually the worst time to get involved. Okay. Now, also at the same time, I've been warning against shorts. I've been saying, be very careful. I've been telling people, avoid the trade scanner shorts. This market is strong. Don't fight it. Okay. If you're going to go short, you take day trades. They're very small. Your stops should be very tight. If you're wrong, you get tapped out. No big deal. You're not caught in the large magnitude move. You don't want to be caught in this. This thing can get ridiculous. Okay. Now, I'm pointing out here that this is a high probability reversal zone in this price area, which basically goes up to like 51, what? 51.6. So we can round that to 51.5. It doesn't have to be exact. But inside of this zone, there's a high probability that it turns the other way. So with that information, you should know, I shouldn't go long here aggressively. If I do go long, I should not be expecting this thing go to 60K, even though there may be many people telling you that it's just getting started and all that stuff. You have to be careful about what you consume on the internet. You have to be self-reliant and rely on the information that you can judge yourself. Comes from a chart. Now, a chart is not perfect. Like I said, you have to also imagine what you cannot see. Okay. That's more important than what you can see. It takes time to get that type of perspective, right? But that's what I teach people. Anyway, so that's the thing. This is a high probability reversal zone, and this thing is likely to pull back. Now, the other side of this is it can go berserk, and it may go to 55K. It can happen. You have to be open to all scenarios. It can happen, but you have to narrow in on a range of scenarios that are feasible for you to work with. If this thing goes vertical and goes to 55K, I wouldn't touch it anyway. This is great if you're long from lower prices. Okay, you've invested lower prices. These are great profit-taking levels. You should take something off the table if you're long from lower prices. Why not? You're at major resistance levels here. This is a good place to capitalize on all these people who don't know what they're doing and they're buying now when the thing looks its greatest, right? That's who this is ideal for. This is not ideal for taking on new risk. And I will always say that at highs. I will always say that. I said the same thing about the S&P and the NASDAQ as well. And they're still pushing all-time highs while the bonds are breaking supports, or they were at least on Friday. Okay, so does that make sense? Let me see what some of the chat people here are saying. Okay. Tio from Australia. Oh dear, I have another mate from Australia. Hello, mate. That's my Australian accent. Where are you from? Sydney? Hello, mate. My mate's from Sydney. It's like 4:30 a.m. over here, mate. All right, this went straight to the take profit. Which one? Okay, hey Alex. Okay, cool. Binance Coin went straight to the take profit. Is that what you're saying? Okay, cool. Now, all right, Casey. Yeah. So, hey, Han. No band practice. Cool. Good to see you. All right. He's very committed to his band. Nothing wrong with that. All right. So now, so you guys understand what I'm saying about this current situation? Do I have any questions about this? So the key points before I get into the investment part, because I haven't talked about the investment part yet. The key points for the short-term trader part is this is high risk. This area is high risk. It can turn at any moment. You want to focus on the risk. So if you're going to go long, right, intraday, it should be a day trade. If you're going to go short, it should be a day trade, right? The trend is clearly bullish, right? The momentum is bullish, so the longs are still favored. If you're working intraday, you find an intraday support or whatever, you find a pattern, you find a reversal, you try to take a little out of that, but don't make the mistake of expecting, oh, this thing's going to run to 53K. Don't expect that. The probability is low. We can't see the probability on the chart, okay? But that's what I'm trying to illustrate here. If I see the market confirm this scenario that I drew here on the chart, which is the ideal scenario, usually it looks like this, right? You get what? A pin bar, okay? Something like that. It's a sort of a pin bar, right? Or it can look something like this pin bar over here. I see something like that, definitely not a place to be going long. And if you're an aggressive short, you can consider the short side there, but it's aggressive because it's counter trend. And there are many instances where you get like a reversal candle like that, and the next day is bullish. We see this with the trade scanner all the time. There was a Litecoin trade recently. It delivered this beautiful bearish pin bar. The next candle was like, actually there was like maybe one red candle, and then the next candle was green, and that was the candle that said, you know what, this trade is wrong. And I pointed that out to the community as well. Conflicting signals. You have to understand the trade scanner can't see a lot of things, so it is still our responsibility to spot certain things. And since the trade scanner uses 4-hour candles most of the time, that's like the main time frame it uses, it gives us plenty of time to make these judgments. You don't have to be glued to your monitor or your phone watching every 2 seconds. Okay, you have 4 hours at a time, so you could check maybe 2 or 3 times a day or once a day and see, is that candle the right type of candle or no? The candles should be going your way, not against you. If they're going against you, that means there's something wrong. The trade scanner looks for momentum. If there's no momentum, it's going against you. So that's where you can take a smaller stop. You don't have to take the full stop. And what happens is over time, if you reduce your stop, but you're still taking those take profits, you'll start to grow your account because you lose much less than what you make, right? That's really like the key to all this. Instead, people all wrapped up with oscillators and stuff. Oscillators are a waste of your time most of the time, especially since you don't know how they work, right? You don't know actually what they're measuring. All right, so anyway, all right, so let's move along here. And let me talk about my next topic, which is the investing part. Let me just see if I have any questions. Would love to come back to test 43K. Sure. Hey, from Holland, Bungle from Holland. Welcome. Holland. All right, Amsterdam. Cool. I love the music from there. Anyway, hey, all right, cool. From Portugal. All right. No falo português. No falo. I can't speak Portuguese very well, but obrigado. Thank you for coming. I could say it in Spanish though. Tudo bom? That's in Portuguese. Todo bien. All right, cool. Asperius, nice to be here. Do you think we have a chance for alt season? Well, that's a good question. I'll get to that. Okay, so first let me talk about this Bitcoin investment situation, right? Because that's the title of today's stream. How to invest at high levels. Clearly, this is a ridiculously high level. And this is going to, what I talk about in Bitcoin affects many or most altcoins, not all of them, but most of them. So it's very important to be aware of Bitcoin, because you can apply this to the altcoin situation. In fact, the Trade Scanner has called a number of altcoins short, which I've been warning people against. Okay, so let's first go to the weekly chart here on Bitcoin. And let's just take a look at the bigger picture, right? Because when you're talking about investing, you should be looking at weekly and monthly charts, not daily charts. You need to see where we are in the bigger picture to get some context. So clearly, I mean, we are at, look where we are. We're all the way back here. I mean, this is pretty significant, okay, that it made it that far. And you better believe that this is a high risk area. There's going to be a lot of resistance here. We just don't see it yet, right? So the likelihood of this thing turning over the next few days is high. So what do we do? Well, the first thing that I suggest is you have to, if as an investor, first you have to know how much you plan to invest. You have to have a plan. You know, you hear that all the time, have a plan, blah, 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 blah. But what does a plan mean exactly to an investor? Because a plan for a trader is not the same as a plan for an investor. So you have to have your investment plan. First, you have to know how much you're going to invest. So for our example, we're going to use $10,000. In fact, most of you, many of you who have followed me for a long time have probably heard this before, but I thought this would be a good time to bring this up again. So you start out with $10,000. You know this in advance. You plan to invest this, okay, whatever amount. I'm just going to use that for example. Next, you have to then look at the chart and you have to basically create like a spectrum, okay? Let me see how I can illustrate that here. So just looking at this entire structure from this low to this high, that's going to be your spectrum, right? And inside of that spectrum, you're going to say, okay, this zone of the spectrum is going to be my high probability or my attractive investment zone. This is ideal. I would love to invest at these prices, but right now, that's just a very low probability. Okay, but that's an area where you're thinking, I want to invest more. Here's like your mid zone. Okay, and in this zone here, you're saying, okay, that's moderate risk. Okay, so the bottom zone is going to be low risk. The middle zone is going to be moderate risk. And the top zone, where we are now, is high risk. Okay, so having these zones in mind is going to affect what? The size that you trade. Now, looking at the chart can give us levels in advance. We know our support and resistance levels. This is important whether you're a trader or an investor. This top zone here, as you can see, the bottom of that top zone is what? 40K. Okay, so basically from 40K to 50K where we are now is a high risk zone. This is where you're going to invest the least amount of money, because as an investor, you have to understand you can invest at any time. It's the matter of risk, right? So you're going to control risk by the amount of money that you invest. Also, you should not really use a lot of leverage for this. You know, like if you only have an account with $2,000 and you say, well, I'm going to invest $10,000, I'm going to leverage the account. That's a bad idea, okay? Because this thing, you have to realize, you have to be prepared in case it pulls all the way back to the 30K or what's this high over here? 31K. So this is the 30K area right here, right? It's possible. It's one possibility of many, okay? It may break that. Maybe it tests the 15K, which is what, the bottom here? Yeah, 16.5. This is the bottom, okay? That's the bottom from 2021 to 22, whatever, beginning of 2022, okay? So you have to be prepared for the possibility. We may not see those numbers again. Forget forecasting. Anyone that tells you that they know the future is just lying to you and trying to sell you something. Please understand that, okay? We have to prepare for the possibility. Bitcoin may not see those numbers again, or Bitcoin might. Maybe Bitcoin goes to 10,000. There's no way to know. What you do need to know is what if it goes there? What if this situation occurs? So you have to be prepared for a range of scenarios. And now with this spectrum or this range, you say, okay, in this zone, I'm going to only invest right now, which means right now, until we break 40K, you're only going to invest out of the $10,000, for example, $100 at a time. And you're going to invest that $100 every 2 weeks, right? You put it on a schedule. So you're not looking at market timing. You just have levels and you're looking at a schedule. So on the first of the month, you buy $100 worth. On the 15th of the month, you buy $100 worth. It doesn't matter the price. It's all because all you know is you're in this high risk zone. If Bitcoin breaks 40K, you may only have, and let's say Bitcoin consolidates, right, for the next couple of months. Let's just say it consolidates a bit, doesn't pull back right away, and it consolidates. So you're buying $100 at a time. It's not much money. If Bitcoin goes to 60K, at least you got a little piece of it. Of course, you can't let greed enter the picture and be like, well, if I invested all 10,000, I'd be up like, 25% right now. And I can't believe it. I only have like a tiny little fraction. This sucks. You cannot think that way because you have to appreciate the risk. If Bitcoin pulls back to 30K, you will be very happy that you still have $9,000 in your account that is yet to go into the market. And your couple of $100 has now been reduced to like, $150 or $100. You're like, man, I can handle this. No problem. Right? That's the situation you want to be in. You want to be prepared for those opportunities. Right? So you use the levels as points of reference. Right now, we're at a major resistance. You want to buy 100 shares here? I mean, today's what? Oh, it's almost the 15th of the month. Okay, you buy 100, possibly at the top. $100, not 100 shares. $100. This thing pulls back a bunch, you'll be like minus $20. Who cares, right? You can handle it. But the first support area, the 44, 43K area, maybe by the 15th or the beginning of next month, maybe we're fooling around there. Great time to buy a small amount. Until we break out of that spectrum zone or whatever, this is zone that I'm trying to illustrate here, you only invest $100 at a time. When we break, now you can start investing more. But what levels? A rule of thumb is you can use the whole number. The major whole numbers are good points of reference, okay? Because everyone thinks the same way. 40K, 35K, 30K. You can start there, or you could do more analysis and look at some more detail. Like 38.5, I know is a level. Okay, so maybe you can put these orders in advance. But the thing is, in this moderate risk zone, you can buy a little bit more than $100 worth. You're following me so far? So maybe inside of this moderate risk zone, maybe you buy $300 worth, maybe $500 worth, because you're only making 2 purchases, right, for the month. And maybe there's an unusual situation where there happens to be an extreme pullback of some kind at a nice low price. Hey, you know what? Make an extra purchase because you want these pullbacks. Instead of being afraid of them, because you're usually going all in, you're taking small bites. So you're looking at this is a sale. It's like you're going to the supermarket and your favorite food is on sale. It's like half price. Oh, I love it. I love this food and I can get it for half price, right? That's how you have to look at that. And when you're doing this small incremental thing, you're now thinking the right way. Now, if Bitcoin pulls back even more dramatically, which again can take this pullback that we're describing here, is not a couple of day thing. It can take months. It can take 5 months to if it's going to pull back that far, right? But if it does, now you're prepared in this zone to start allocating more. Meanwhile, you have all this money on the sideline because by that point, you may only have between here and here, you may only have $5,000 invested in total in that area, right? And you'll have an average price. So the midpoint of that area is most likely where you're going to be long from, right? That's going to be your average price. And then we start testing these levels, and maybe you start putting $1,000 at a time to work, okay? Something like that, because now you're buying into these lower levels where chances are, if people are going to buy, this is where it's going to come in. But you have to understand something. If the market gets that low, it's probably going to look really ugly, and you're probably going to be hearing a lot of negative things in the news. This is why you have to ignore the news. If you're paying attention to that, and Bitcoin's going to zero because the Federal Reserve or the U.S. Treasury declared Bitcoin illegal, and you're going to be like, I'm not going near this thing. Meanwhile, it may be nonsense, it may be an exaggeration, whatever it is, right? And then price may be fooling around here, and you're like, I'm not touching this thing. Meanwhile, it's at its best prices, right? So that's how you invest in something over the bigger picture. By preparing. Now, what if Bitcoin never gets back to here? It never goes back there. Well, it's going to pull back at some point. Nothing moves in straight lines, okay? And the pullback may be this vicinity here, and at least you're accumulating some. You may not be able to put all $10,000 to work. Maybe it reverses, right? Maybe you get this pullback into here, into this zone right here, right? And it finds support, and it turns around and starts breaking resistances. At that point, you want to put some more work on a breakout. Okay, you're buying something that's coming off of a higher low and it's strong. Okay, and plus you have a position that you've averaged into. So everything is kind of working for you. You understand? So that helps you manage your risk better, because if Bitcoin really gets hammered, right, you don't want to be long all of it from one price, like up here, and then Bitcoin has this dramatic pullback where you could have gotten much better prices. And if you use leverage on top of that, now you're getting margined out, right? You're getting pushed out of your position because it goes too far against you. And, but you thought it was going to go higher. But this guy told you it was going to keep going higher, and it just turns around. You want to be able to take advantage of those situations, not be scared by them. Does that make sense? So do you guys follow me on this? It's a simple investment type of plan, right? And you're just waiting for an opportunity, a better opportunity. But meanwhile, you're still getting involved now. So you still have a taste. If it continues higher, at least you could say, well, at least I'm making a little something. It may not be a whole lot, but it's about the risk you take, not about how much you make. Please remember that, okay? All right, so that's pretty much my investment idea for bigger picture. Now let me see what people are asking here. Okay. So hey, Izzy, good to see you. Peter, all right, cool. All right, Amika, good to see you. Alex, these answers are great for. We had a week in the community chat server. Oh yeah, right. You know what, Alex? In fact, that conversation is what made me think of this idea. I'm like, because I wanted to answer it, but I'm like, what? This would be a good stream topic. Like, how do you invest in these levels? Because that's where I saw all that stuff about the fear of missing out and the anxiety and this and that. And I was like, so I wanted to type it in the channel, but here's the answer now. So thanks for mentioning that. Okay. So any questions about this? Does this make sense to you guys? I mean, when I say it makes sense, it may, oh yeah, okay, it makes sense. But you have to be prepared for this. It's about preparation. It's not about forecasting. Again, everyone is always obsessed with, I need to know the future, right? And then you guys are always chasing after these people who tell you, you're gonna make millions of dollars if you follow my magical strategy that will tell you the future. And I know it sounds ridiculous, but that's the kind of stuff you consume and you don't realize it. I see one after another on YouTube, and I see what the kind of stuff that they share. And while it appears to be helpful, if you think about the underlying message of what they're implying, it's actually not helpful. And the reason is because it gives you this false sense of confidence. Like, oh yeah, this guy does this, so it must work. Meanwhile, what he's showing you is random. And when you try it yourself, you're like, I followed this thing exactly, and I made some money over here, but then I lose money over here, and I made money here, and I lose money here, and then you can't figure out why you can't get ahead. And then when you ask the guy, I've been using your system, and I'm losing money, and he says, you're doing something wrong. It's always the same story. I've seen that over and over. So, you can say the same thing about my trade scanner. You could say, well, I buy one here and it's red, and I buy one over here and it's green. Well, but the thing is, the trade scanner, if you use just a little extra context, you can actually manage those trades better. In fact, so bringing up the trade scanner, let's take a look at what Stian brought up over here. Hey, Dijon, good to see you. All right, so let's see what Stian brought up over here. Binance Coin. You guys want to see Binance Coin? So here's why I like to bring up the trade scanner, because the trade scanner, understand what its purpose is. Its purpose is to give you a setup so that you don't have to look for one, right? So the trade scanner says, hey, there's a potential trade over here, and here's where you should get out if you're wrong, and here's where you should get in if you're right. Here's where you should get out if you're right. So it gives you a stop, it gives you a take profit. The reward risk is proper, right? So that you win more than you lose. And we're working on some more filters, like a trailing stop and a break-even stop, to improve the performance further. But there are many times when the market is all over the place and it appears that the trade scanner is producing random trades. Okay. We had a situation with the stock market where S&P making new high after new high. The trade scanner is calling longs in stocks and they're all getting stopped out. And what is going on here? The S&P is going higher. How can it be getting stopped out of all these stocks? Right? Because these stocks were not correlated. Right, so they're losing money. Meanwhile, the whole market is going up, or at least it appears to be going up, and the stocks aren't. So you have to be aware of these things, and you have to be aware of the context so that you're better prepared to handle the conflicting signal. right? And that's what I hope to train people to be able to do. So in that sense, the trade scanner happens to be a very valuable tool because it can teach you how you should trade, how to swing trade, because it calls the trade for you and then you manage the trade. And soon the bot will take the trade for you. All right, we're working on that. So anyway, okay, I will wait for 25 and 20. I am patient. Okay, Peter, cool. But the option that I gave you here is you don't have to wait. It may never get back to those levels. It may only go to 35K. So instead of having to be caught up and missing out and forecasting and trying to figure out the wave counts, you don't have to do any of that. Just know your levels and see if the market eventually delivers and see what it delivers. But these are bad prices, right? They're at the highs. Who the hell wants to buy the high? You got to be nuts to buy up here. You just buy smaller and you accumulate a position over time to have an average price. You just don't want to be heavy at the top. You want to be light at the top and heavy at the bottom. You know, we're assuming Bitcoin is generally going to be bullish, right? I mean, it's set up to be generally bullish. You don't want to do everything that I just described. You don't want to do that in something like a penny stock that can go to zero. Okay, you don't want to do it there. You want to do it in some kind of asset that has that kind of long-term stability. And I think Bitcoin qualifies for that. All right. So anyway, so let's talk about Binance Coin. Now, I'm going to go to a 4-hour chart, okay? Because the trade scanner pretty much its main time frame, it looks at numerous time frames, but its main time frame is the 4-hour chart. Now, let's go to Binance Coin. Now, Stian, are you saying that Binance Coin went straight to its take profit? Oh, I wouldn't be surprised. Look at that. Okay, so let's pull up the trade here that Stian shared with us. This came from the trade scanner. Okay, long. It came from the trade scanner earlier today. So 10:30, was that 10:30 a.m.? Is that 10:30 a.m. New York time? Entry price 320. So I'm going to put the trade on the chart here. Okay. And again, these are great when it does things like this. It doesn't always work out like this, but if you happen to be part of this, beautiful, right? All the work was done for you. So clearly the trend was bullish. It was following Bitcoin, higher lows, right? I could say that before this move, but let's put the trade on the chart. So 320.70. Let's put that on the chart first. 320.70 is around here, right around here. Right about there. Okay, that's when it called the trade long. The stop on this thing was 315.96. So basically 316. 315. Now, see, if you had the free trial to this, you would have gotten this trade in your email. Right about there. We'll just put it there. Okay, it's not the exact price, but that's pretty close. Okay, and now let's put the take profit. Right? Do I have this right over here? 320 here. Let me adjust this one a bit. Hold on. Let me adjust that one. 320.70. All right. That I'll just leave it there. And then we have the take profit, right? Which is what? 327.80. Man, it went straight there. This is 327.80. Okay, and it's fooling around there right now. So do you realize if you had the free trial for the trade scanner and you have a 1-week free trial today, if you had signed up like yesterday for it, today you would have gotten this trade in your email and it opened here, right? That's where you should have bought it and you're out of this trade. What a beautiful trade. I've shown many losing trades, by the way, right? And if you could see, if you want to see a track record, just go to the Market Signals Pro website. There's a link in the description. You can see the track record. So I don't want people to sit here and think, whoa, it's beautiful. I want to buy this because they're all like this. I want you to understand, not all the trades work out this way. But the key is when you have a losing trade to manage it early. If this trade over the next 4-hour candle, right, you bought it here, okay, over the next 4-hour candle, turns into like a red inside bar, but it's not at the stop yet, you should exit the trade if it looks like that. There's no reason to stay in it anymore and watch it go to the stop. There's no reason because momentum, as you can see, looks like this. So when you get into a trade, okay, with the trade scanner, the next candle, like I was saying earlier, should be in your favor, not red. So if this was a red pin bar, like on the next candle, you should be like, all right, I need to get out maybe for break even, take a small loss. No reason at that point to hold it to there. Now, we don't have the trade scanner reporting, right? We just have it. It goes to the stop and then it gets reported. We don't have all that context adjustment in there, right? But that's why we're employing the trailing stop to see if the trailing stop theoretically should improve the results over time, okay? And all that kind, and the break-even stop. But the point is, you should be able to manage a trade yourself, okay? And it's not that hard. You don't have to have decades of experience to do that. You just have to understand what to look for. And I've been sharing charts with people, right, in the community about what conflicting signals look like, so that you know what they look like, right? And like, oh, this is a conflicting signal. I should do something about it. Okay. And that's what I want people. That's how I want people to use the trade scanner. And then you will outperform the results you see on our tables. Okay. So anyway, so that's what's going on here. Nice trade. Anyone have any questions about this? I mean, this is ideal. It'd be nice if they all looked like this. I'm working on filters to filter out some more of the red trades that we do get, because sometimes this thing gets faked out, and I'm trying to get those low momentum trades. I'm trying to filter them out of the system, right? But this was a beautiful high momentum trade. Now, how come? What's going on here? Well, have you seen Bitcoin? We just looked at Bitcoin, right? Bitcoin is touched 50K. So we shouldn't be too surprised to see this. Bitcoin has also been strong all along. I pointed out Bitcoin at supports. And even though the trade scanner called numerous shorts, I said, avoid the shorts. You want longs, not shorts. Okay, does that make sense? Let's take a quick look at a short. I think it called XRP short. Am I right, Stian? XRP was a short. And I warned against that. I said, stay away from that thing. Right here, I'm seeing some chats here. Hold on, what are you guys saying? Okay, hold on. Hold on. So let me pull up XRP real quick. And someone had a question earlier. Let me go back to your question. XRP USD, right? Now, oh, well, that short was a bad idea, as I warned people. Now, but let's just talk about this situation, because Bitcoin was strong all along, right? That there was your cue to avoid shorts. Most likely that XRP short was called around here somewhere, okay? And if you were in short something like this and a few candles going your way, okay, great. But the thing is, if it never goes to your take profit and you're getting a reversal candle, a 4-hour pin bar, move your stop at least to break even. Do you understand that? That's the key thing, the trade management. I don't know why this thing called it short. Let me look at a weekly chart here. Let me say, I'll probably be able to see it on here. Yeah. Okay. Because generally XRP has not been doing as well. I mean, look at this weekly chart. If I compare this to Bitcoin, this is relatively weak. You understand? But it still responds to that short-term momentum. You have to understand that Bitcoin is the leader. Okay. Bitcoin is the leader, and these alts are the follower, just like the S&P leads and many stocks follow. Not too many stocks lead, although penny stocks have the ability to, right? The Russell 2000 was going nuts earlier today, and that may have something to do why the market is generally strong. The small caps, okay? Tillin says, FOMO means fear of missing out, but currently it looks like we really are missing out. There are some high-risk entries now, correct? Okay, so Tillin, all right, let's take a look at rates real quick. But my whole purpose of today's stream was what to do in these situations, in this what appears to be a runaway market. Let's go to the bonds real quick. ZN1, right? So this bond situation, as I pointed out on Friday, we broke a support on this thing, right? Now, bond prices going lower means interest rates are rising, but this it's a break. This should not be doing this, right? But I also said we may get the failed low as well. Excuse me. And it looks like we're getting the failed low, possibly. So, excuse me, this is not a major break, right? But it is a break. So we have to keep an eye on it. If these bonds start rallying and these bonds eventually do this, then that means rates are going lower. And this market that's strong is probably going to continue, maybe a little pullback here and there, but you're not going to see any major pullback, right? If these bonds start becoming friendlier. You have to understand something about the bond market. The relationship is not one-to-one with the stocks. The bonds basically add like weight over time. They add weight. In fact, back in 2021, or was it December 2020 going into 20? No, I'm sorry. It was 2021, December of 21 going into 22. The S&Ps were making new highs, NASDAQ new highs, but the bonds were dramatically selling off. Okay. And no one paid attention. The bonds were selling off while the S&P was making new highs. I warned people. No one listens, of course. They think I'm just some, angry bald guy. And eventually it caught up to the market. It took a couple of months and it took a catalyst. But the thing is, when the bonds add weight, and then when something comes along and then really sparks the catalyst in the market, then that's when people feel the bonds. So understand that about the bonds. You have to look at them as, okay, this could be a problem in the future, but it's not a problem right now. You have to accept each market for what it is. Like the stock market wants to make new highs. Okay, don't get in its way. NASDAQ wants to make new highs. Bitcoin wants to make new highs. Don't get in their way, right? But look for these warning signs because at the same time, this puts weight on them. And when something comes along and changes people's perception, all of a sudden, oh, have you seen interest rates? They're going through the roof. And then next thing you know, the market is ugly, right? And everyone's like getting out. So understand that. So Tillin, go back, rewatch my stream. I explained a whole thing about investing into this thing as into Bitcoin as it continues to push highs, if it wants to do that. Okay, I talked about the whole spectrum risk thing. All right, so you guys clear on that? Now, someone asked a question earlier. Let's go back. And you should not ever fear missing out. Never have that feeling. If you have that feeling, it means you're full of greed, honestly. You should not fear missing anything because markets pull back. They always pull back. There's always an opportunity somewhere. You just have to wait. Okay? It will come. It may not be as big as you want it to be, but markets don't move in straight lines. Don't fear missing out. It leads to buying the high. Okay? Don't do it. So, who asked me that question earlier? I'm just going back here. There was a good question. Was it Nima? Can it happen to Bitcoin? Also, how come ZN1 is okay? So I just explained that. I just answered that question. Okay. So I think that was the question I wanted to answer. Yeah. Okay. So you guys following me on that? XRP. Oh, here's the XRP trade that Stian's sharing over here. This again came from the trade scanner. Yesterday this thing came out and it called it short. It doesn't say. Oh, it was short here. This one says short, right? Short, 52.80. And I specifically wrote about that in my channel, in the channel, and said, avoid shorts. Avoid shorts. So you should have seen that and you should have said, okay, this XRP short, I'm not taking it because this guy said to not take shorts. Okay. Or they're very risky. All right. And that XRP was worth a little something before you got the bullish pin bar. So again, the key is being proactive and managing those trades. Maybe you don't make money, but if you're breaking even, if you're mitigating your risk, you are doing your job. And over time, right, when you catch these winners, but you're mitigating your risk on the losing trades, whether taking a smaller loss or breaking even, then you will start to keep your money over time and not get caught. What wipes out these accounts usually is you're too big, right? You're over leveraged and you get caught. And then you go into hope mode and you hope that this thing comes back, right? And sometimes it comes back randomly. Sometimes it doesn't come back and you get margined out of your account. It's a gamble. It becomes a gamble at that point, and that's really not the best way to go about this. Okay. Does that make sense? All right. Any questions over here? Can you show XNO? What is that? Is that a coin? Let me see what else people are saying over here on YouTube. So again, by the way, if you like my stream, people, please press the like button. Please press the boost button over there on TradingView. Subscribe to the channel. We always have new things that we're working on and things are coming along. I'm trying to get on Rumble. I just have some technical things I have to work out. But, I appreciate all the support and everything because it helps to keep this whole thing going. And my purpose is to open your eyes to the realities of the market. Okay. I'm not very popular because I don't tell people what they want to hear. I share the reality that I see in the market, and I'm trying to open your eyes to what you can't see on the charts. And some people like it, but usually people that have gotten beaten up a little bit can appreciate what I say. People that are new at this don't want to hear a word. They want to hear the guy that tells them that they're going to be making millions of dollars every day. That's the guy that they want to listen to. And then they find out the hard way. Okay, I can't convince people. You're gonna have to find out the hard way if that's you. All right. Anyway, so let me just go back. All right, I don't see any other questions. Any questions? Okay. Oh, the alt season, Aspirnus. Do you think we have a chance for alt season? Okay, that alt season thing. You gotta be careful with that because again, Bitcoin defines alt season or not. All right. Also, interest rates also help along with that. Now, interest rates, as we just saw with the bond market, are sort of poised to go higher, right? Because as bond prices go lower, rates go higher. That's not ideal for alt season. So don't get caught up in alt season is just another word for I have an opinion. Don't get caught up in that. All right. Bitcoin running here. I've seen a lot of these alts. Let's just take something like Litecoin. A lot of these alts have been relatively weak, right? But now they're all reacting. They're all reacting to this Bitcoin move. So now people think, alt season. But let me show you something, right? Just go to the weekly charts. So we see Bitcoin pushing 50K, right? But look at these coins. I mean, this is Litecoin. This sucks, right? This is nowhere near the progress that Bitcoin has made. I mean, look at this. This is not even pushing this resistance yet. And people are getting excited about this. Alt season requires money, like free money, cheap money. Okay. The alt season that we had back in 21 that made everyone billionaires overnight, that was a result of overstimulation from the Fed. If you don't realize that, you're going to have problems. Okay. So understand that alt season is really a recipe of a few things. We need cheap money is the main thing. So we can get these little movements here that look exciting because Bitcoin has a reason to move somewhere, right? Bitcoin is the leader. I mean, look at Bitcoin and that Bitcoin chart and that Litecoin chart. I mean, look at Bitcoin. This is the Bitcoin progress, right? It's nowhere near its all-time highs, but it's made some nice progress compared to many of these garbage altcoins. So don't get all caught up in that altcoin season nonsense. That's just herd mentality nonsense. Look at the leader and compare the leader to the follower. If the followers look nothing like the leader, then chances are, they're not going to go anywhere. If the leader turns, those altcoins are going to go back in the toilet. So please realize that. It doesn't mean, I'm not trying to scare you out of them and tell you, hey, it's a bad idea. I'm not trying to scare you, but just understand the risk. Okay. You want to get involved in some altcoins because you think, Bitcoin is going to go to 100K. Well, in that type of situation, like I said, you're going to need more favorable interest rates. And the other thing, which Alex knows, I've talked about this with Alex numerous times, the new coins, right? The new coin. Oh, so here he goes. Look what he says. Right. So Alex says here, and this is the point that I was actually going to make. So he's a step ahead of me. Litecoin is one of the old coins. I don't think alt season will affect Litecoin. Correct. I agree with that. The new coins. So he's saying that the new coins have made their move, right? So if that's the case, then there is no altcoin season. Because if there's going to be an altcoin season, you're going to want to be in the new coins, right? The ones that are really cheap, the ones that have all the potential. The old coins, people are probably not going to get back into those, right? Because they want the new idea, the new exciting idea, right? So please keep that in mind. We've had a number of talks about this. In fact, Alex in the community chat has shared the whole list of coins that are on his radar with that idea in mind. All right, and it's a pretty interesting list. So there's the list. All right. So thank you, Alex, for sharing that. Thank you for sharing that. Okay. So these are some things to keep in mind. All right. So any questions? Right. And I agree with that. So Bitcoin's on its highs. These things have made their move. And now some of the older coins are just starting to kind of come along here. They're just sucking everyone in my opinion. If Bitcoin turns, and if it turns hard, because we don't know how hard it's going to turn, right? Markets turn. Look, there was a turn over here, right? But the pullback wasn't very long. It looked a little dramatic in the beginning, okay? And then it turned here, and look where we are now, pushing the highs. All right. Now keep in mind too, I'm leaving the letter B here because B waves can make a higher high. It is possible. B waves can do that. And that's where we are right now. We're in the failed high area. And this may still be a B wave, even though it doesn't look like a typical B wave. B waves are usually 3 legs. I count 3 legs, but we have to see how this goes. So just something to keep in mind. You don't want to get married to that idea, but just keep it in mind. Okay, so but they will also be affected by coin inflation. Okay, true. So things you have to keep in mind. But if Bitcoin keeps doing its thing, you're going to see more and more hype develop. Understand that highs, the higher it goes, the greater the risk. Don't feel like you're missing out. You want to pull back, okay? And then you want to know your support levels like I went over earlier. That's what these lines here are on the chart. You want to know your support levels so that when you start testing those levels, you have something to think about at that point, okay? And depends on the magnitude of the level, or how high, like this level up here, the 45, 46K area, that's going to be the easiest one to break, okay? And if it tests lower, those levels, unless there's a major catalyst in play, are going to most likely be harder to break, right? That's the theory anyway. The market can do whatever it wants, and they may just break like it's not even there, right? If there's a catalyst that's strong enough out there. So again, we don't know what kind of news is on the horizon. Usually these type of catalysts are surprise. Everyone's caught by surprise. So don't get sucked into the hype, okay? Do you think we have a chance for an alt season after Bitcoin? It's all dependent on interest rates. If the Federal Reserve cuts rates like everyone wants, and we start to see rates really come off, because rates are still kind of high right now, they start coming off and people start getting cheap money again, and people can start borrowing money again, then that's going to improve the argument for altcoin season. So don't look for the answer from me. Look for the answer from the bond market, because that's where money comes from. That's where cheap money comes from. Understand those basic economics, right? That's where altcoin season even begins, because altcoins are extremely high risk instruments, speculative, right? So when people have money to throw around, they throw it around at speculative instruments, things that, hey, maybe I can turn my $1,000 into $10,000 and I'll just buy this stupid altcoin because some moron on YouTube told me to buy it, right? And they start gambling. And that's when you see those bubbles, right? That's what usually leads to what is a asset bubble. But we don't have cheap rates. And the Federal Reserve is very reluctant to cut rates. So you want your answer for altcoin season? Go call Chairman Powell and ask him, when are you going to lower rates? And that's your answer. He'll give you the answer for altcoin season. All right. So I hope that answers your question. Okay. So, right. So Alex is very on top of this. And Alex has also shared a lot of information in the community chat, which is free. So click on the link in the description, right? You could join the community, go into the community chat, and you could talk to Alex about it there. He shared tons of stuff about that. All right. So let me just see what's going on over here on TradingView. I'm talking too much today, people. I'm talking too much. These streams are supposed to only be 30 minutes long. Tino from Mexico. Where is he? Tino from Mexico. Is that you? Can you please check AVAX? Okay, I got to wrap this up, but let me speak Spanish. Buenvenido. Mucho gusto. Yeah, okay. So, puedo hablar algún español. It's my Spanish for today. It's my Spanish lesson. All right, I'll take a look at AVAX real quick. I'll do my Spanish lesson. All right. So let's see if it's toro or oso. Let's see. Okay. All right. So we're following Bitcoin here, right? So toro, el toro means the bull. Let's take a look at the weekly chart. Okay, and he probably wants to know compra or verde, verder. Definitely not. Let's see. All right, so look, you have a higher low over here. All right, it's following Bitcoin. Nice breakout on this thing. Okay, nice breakout over time. So that's good. But again, you have to realize something. Let's zoom out a bit on this. I mean, look where it's coming from. Just look at the overall chart. Okay, so you have old supports back here at these prices. So if it is going to rally higher, it's probably going to start having a hard time in that area. Chances are. So be aware of that. Now, if Bitcoin turns around over the next few days, and keep in mind, Bitcoin is the leader and it's in a high risk area for reversal, this thing can develop a lower high. And if that's the case, you most likely will find yourself testing this support area relatively soon. So if you're interested in buying this thing, maybe investing in it or something like that, at least wait for more attractive prices. You're likely to see them. Don't chase this thing. And if it breaks out, it starts pushing over here, right? And maybe you want to take a small bite to see how far it goes. Okay. But here's the thing. If it gives you a conflicting signal in that area right there, something like that, that's failure. That's a failed breakout. That's a fake out. That's when, if you're long at that point, you have to get out, or it's in your best interest to get out. Let me just put it that way, because you don't want to get caught from the top. It's a bad place to be long. Okay. Even though it may look at the moment like it's going crazy and people are talking about it and blah, blah, blah. You understand? All right. So that's all I'm going to say about that. So generally, like for like short-term day trades and swing trades, okay, you're looking for longs and this and that, but be very careful in those areas. The ideal places to go long are going to be here. Okay. That's going to be the ideal place. And if you're long, you want to be looking to get out here, right? To see if you may get a double top there. Don't be misled by what you see. Think about what's ahead and think about the risk, okay? The magnitude of risk. If you were asking me over here what I thought of it back here, sure, of course we could see after the fact, but at least I would have said one thing here. You have a possible double bottom failed low situation. That was obvious whether we see this or not. Like if I cover this up and this is all we saw at the time, right? This is all we saw. And you said to me, what do I do with that? That's a failed low. Double bottom situation. So that would be high risk for shorts and lower risk for longs. Does that make sense? But that's not what we have now. Okay. So let me turn this replay off. So this is now going to be much riskier for longs. Okay. All right. So I want to answer that question because Tino comes in here every week and he helps me practice my Spanish lessons, my Spanish. All right. Hablas muy bien. Gracias. He said, I speak good Spanish, although my Spanish, mi español es muy mala. It's not very good, very bad. All right. Once I mentioned to you a couple alts, some weekly level. Okay. All right. I don't know what your question is though. Would you take a look at Bitcoin Ethereum pair? I know you don't like, well, Bitcoin in terms of Ethereum. Yeah, I got to look. I've been over this an hour, man. I'm sorry. I got to go. I'd like to answer all these questions, but I got to go. All right. So you know what? Put them in the channel or ask me again next week and I can go over some of these things. All right. Like I said, these streams are supposed to be a lot shorter. Okay. Okay, cool. Yeah, all right. I'm getting better every day. See, I understood what he said in Spanish. Right. Muy bien. Está bien. Uh-oh. My charts. Okay, there we go. All right, you guys. So again, where's my trading view? Everything turned off on. There we go. All right, you guys. So again, if you guys have any other questions, you know what? You know where to find me. You guys pretty clear. It looks like you guys understand where we're going with this. You guys are pretty on top of it. So just the main thing is don't get caught up in the hype. Understand where we are in terms of levels. Check the charts first and understand price. And also look ahead and consider the risk. Consider what you can't see, and I think you'll be better off. And consider that spectrum that I talked about earlier, where if you're going to get involved small near the highs, and as it pulls back, you'll have an opportunity to buy more. Markets don't move in straight lines. Okay. So yeah, I'm sorry, Alex. Otherwise I would go through your thing real quick, but I got to wrap this up because if I keep doing that, I'm just going to be here all day. So just bring it up next week or bring it up in the chat. Maybe I can, maybe Alex, I can do one of my community, charts that I've been doing recently. Thank you to Stian. I could probably do like a quick blurb in there about that. Okay. So I'll remember that. You want to see Ethereum, Bitcoin. All right. Okay, you guys. So everyone, again, thank you. Check the links in the description. Check out the free trial. There's a lot to learn here. Enjoy the rest of your day, or the rest of your evening, wherever you're in the world.